The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. This happens to be a big anniversary date in the stock market. Many of you probably don't remember this, but on August the 25th, 1987, the stock market peaked at around 2,700 and change, I think 2,750, something like that. It was on a Tuesday. I remember this so vividly because I had been on TFNN. FNN, which was the Financial News Network in Los Angeles, which is now CNBC. CNBC bought that from, which was actually owned by Merrill Lynch. Somebody at Merrill Lynch decided to sell it, but CNBC bought it, and Sue Herrera and Bill Griffith went to New York to start the show and everything. But I'd been on regular with Bill Griffith, and I've been talking about this harmonic convergence where all these planets were coming together, 5 of them, on August the 25th, and that was on a Tuesday. What was so interesting about this is that, just go through the history of this. After the market topped on the 25th of August, 8 weeks later, it had dropped 61% of its value. We were trading at around 1,600, I believe, in the Dow Jones at that time. It was making a perfect, to the exact point, a 61% retracement of the August 9th, 1982 low. And that was the best buying opportunity of that decade by far, I think, other than the August 9th of 1982. And, of course, the market went from 1,600 to 17,000. It went up 10 times. Folks, it was the most scariest time I've ever had in all my years in the markets, going back 6 decades. I was short, and I was really scared because I didn't think I would be able to get the money out of the account. This is when the plunge protection team was formed. Greenspan, Rubin, and I forget who the other dude was, but no, it wasn't Rubin at the time. It was Greenspan and Baker and somebody else. I forget exactly who that plunge protection team was, but they basically opened the vaults of the banks and told them to start buying stocks, and then the next day, on the 20th of October, the market took off. On that day, the 19th, were the most bankruptcies that the Chicago Mercantile and Chicago Board of Trade had ever had. You could have bought seats at 50 cents on the dollar on that day. That's how many people lost everything because of the collapse that we had. Whether we're going to have another one like this or not, I'm not sure. But boy, it's sure set up for it. That's for sure. The reason why this is so memorable, my daughter, my oldest daughter, was at the 49er game in San Francisco yesterday at the new stadium. We fortunately had some friends at BlackRock, and they had a place to get tickets there for us. So she and her friend went to the game, and of course she was texting me during the game. I was getting it on my email. I don't text, but she said, "Do you remember where we were on my 21st birthday for 1987?" And I said, "I certainly do." For some reason, she wanted to go to Hollywood Park. And she had only been there a few times through all the years that I was at Drexel. And I had left Drexel in 82, and this was 87. And so I still had friends there at the track, but it was a Sunday, and it was a hard time to get tickets because it was a special day. I forget what day it was. I think John Henry, the great racehorse, was on show that day, or he might even have been running that day. I'm not even sure. But no, he wasn't running. It was just, I think he was just walking around the track. But she wanted to go just to be around some movie stars and stuff. And I said, okay. So I called, and fortunately I was able to get a place at the Jockey Club up in the Gold Cup room. The manager there had been a friend of mine for many years. And so we were up there, and we were standing I'll make this brief, but this was really funny. She was all dressed up. She had a beautiful hat on. She was dressed in yellow, and she had beautiful long blonde hair. And both of my daughters were drop dead gorgeous. But anyway, this woman and this man walked in, and she said, "Dad," she said, "that guy's a movie star." And I said, "Yeah." And she says, "Oh my God." She says, "Is that his wife?" And I said, "Yeah." I said, "That's his wife, and she's a movie star too." And she said, "You know them?" I said, "Yeah, I do." And I said, "Would you like to meet them?" She said, "Oh no," she said, "I'd be too embarrassed." I said, "Come on." So we walked over, and it was Robert Wagner and his wife, Jill St. John. And she is probably the most beautiful woman I've ever seen. At that time, she was about 45 or 46. But what was really funny is I walked up to them. He knew me, and I knew him. And he said, "Larry, who is this beautiful young girl?" And I introduced, and then Jill St. John asked Jill if she'd like to go to the powder room, and she did, and they were gone for a half hour talking, and she came back, and she said, "Dad," she said, "I met so many people there that I can't believe it." She said, "I'm ready to go home now." And I said, "No, we're going to stay and see the races." But anyway, that's how those memories come up, and makes me really brought a lot of really warm memories at that time. Folks, this August 25th date, I don't know if it means a great deal, but we have a new moon today, and we also have something extremely significant, and that is that we have a Venus-Uranus aspect. The Venus-Uranus aspect is the major aspect that Bradley focused on in his book, Stock Market Prediction. I know he didn't know Fibonacci numbers. I'm almost sure of that, but if you take the Venus-Uranus cycle, 365 days of the year, divided by the Venus cycle, which is 225, that comes out to 0.618 of the year. And if you take each of the as it goes around the zodiac, it goes from 0, to 90 to 180 to 270 and to 360. Well, we're at 270 right now. And this is a very important, it's a trine, and it has a probability of being a high better than 85% of the time. And when you add to that we're at a new moon, this is not the time to be buying stocks. I mean, wait a day or two. I mean, sure, maybe it goes up forever. And we made a new high in the Dow Jones futures, but we have not made a high in the Dow Jones cash. Whether that means anything or not, I don't know. It's still way too early. What I do know is that if we close in a new high ground here in the next 2 days in the Dow Jones above 17,150 that Basil talked about, that's going to tell me that the Bradley model is most probably not working at all. In fact, it's 4 or 5 days away from where it should have turned. We've been straight up, folks, since the full moon of August the 14th, and here we are in the new moon of August the 25th. And it was 11th. Excuse me, 11th was the full moon. And so this is where we are right now. And so I think that we have to be a little bit patient here, and if you want to buy it, let it back off a little bit. I notice everybody in the whole world is bullish Apple again, just like they were at 700, and they'll probably watch it go to 900, but we'll have to wait and see, what happens with that. But it's important to remember that this Venus-Uranus cycle is very, very accurate. It's the most accurate of all the aspects. And when you add to that the new moon, which is pretty accurate in itself, that gives you a pretty good indication of where we are in the market. And we'll see. We are at a double top, no question. We've taken out the high of the S&P cash. We've taken it out in the futures. They're talking about 2,000 in the S&P, just like it was some kind of magic, just like they did when they talked about the Dow at 17,000 before it went to 16,300. So, it dropped 700 points after they talked about that. So these numbers, I don't think they're nearly as important as people give them credence, because of the fact that it's patterns that really, stand out. Now we're really at a very, very important spot here, because if we go up really strong this week and we're moving, say, 1 or 2% higher, and the S&P gets above 2020, it's going to be really, really interesting, because all of these long-term patterns that I'm looking at are so bearish. I was just watching one on CNBC, and I had to quickly go up to the TV because I was in a different room just to see which one it was, and it was the S&P cash, and I recognized it as this long-term bearish, 1, 2, 3, 4, 5 reverse point wave that I've been talking about for months here. Now this has taken months to form. That doesn't mean that it's wrong. Maybe it is wrong. Maybe I'm full of baloney. Well, I'm sure I'm full of baloney, but maybe it's really going to be wrong this time. I have not seen one like this because they're in every market. I mean, I've seen them in the FTSE, the DAX, all of them. They're all the same. I mean, they're everywhere, but the market keeps going up, and there's nothing wrong with that it keeps going up because that's what it's supposed to be doing. I watched a fellow on Friday's CNBC show that had been one of the most prominent bears on CNBC, and they had him on because he had changed his mind from looking at 1,200 in the S&P to 3,000 in the S&P. And they asked him to explain why all of a sudden he changed his mind, and he said it was because of the meeting at Jackson Hole, Wyoming, and the comments by Janet Yellen. I don't think she said anything, and they commented that, well, she really didn't say very much, but the way he interpreted it was that the Fed was going to keep putting money into the system, and the commentator asked him, well, they've been doing that for 3.5 years, and nothing has really changed, but now he's bullish, and he might be right. Who knows? I don't know. Hey, look, you can be wrong a lot, you can be right a lot, and don't worry. If you keep your losses small, you're going to be okay. When I was getting ready to do the show today, I was reminded about my years at Drexel, and I had some wonderful years there from 76 through 82. I left in February of 82, and I remember 1980. I'd been long gold for 3.5 years, gold and silver, and I was getting out of positions, and I was selling everything, all the gold out at 650 in early January of 1980, and I did that for several reasons. I had a whole bunch of targets up there, that 600 area, 6 to 700 area. But also, if I sold in January, the taxes wouldn't be due for 18 months. And so that was another advantage of selling in January. Well, I did, and I sold out at 650. The problem was the first 3 weeks of January, the market, gold went $200 an ounce straight up to January 20th of 1980, topping at 865 on that day. And I had some really good friends that I had made through the years because I'd making the money. And when you make people money, you seem to make more friends than when you lose people money. And one of those guys was angry with me because I got him out at 650, and he never spoke to me again, even though I made him well over $1 million in a period of 3.5 years. The man never spoke to me again. I think of him often. I wondered whatever happened to him, but he moved his account over to Dean Witter, which I understand later that he lost all the money a year and a half later, buying gold all the way down. And but I remember the situation so very, very vividly that it really reminded me of that. And I wrote I wrote a resignation letter to my boss, and he kept it on file when I left Drexel. He gave it to me in a frame. So anyway, we'll get back and we'll talk about the markets. I'm sorry to reminisce, but as you get old, you got to remember things.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the New York Stock Exchange Index. As you can see, we have not made a new high yet. We're trading at about the 80% retracement level. The high on last Thursday was the exact 786, and then today the market has gapped up above that 11,000 level, and that takes it up a little above the 786. If this one goes into new high ground, if that New York Stock Exchange Index goes into new high ground, I believe we'll probably go up and make another high, another 5% or more. But this is such a big pattern long term, folks. Someone asked me over the weekend, emailed me and asked me what would it take for me to turn bullish. And the answer to that question is I told him, I said, there is not an event that would make me bullish looking at these charts. So they'll have to disassociate me from technical analysis before we do that. We have a caller from New Jersey. Victor, are you there?
Yeah, how you doing? I got three things to tell you. You had that big earthquake in California. That's exactly 3 years ago from they had one 3 years ago here in Jersey. You know what I mean? Yeah. I guess they cleaned up the underground bunkers out there. You know what I mean?
Sure.
Serious. Hey, next thing. There's a gap on SPY at 109.80 from 2011. Will that ever get filled?
Most gaps are filled, and I think that it will. The only gap that I know that hasn't been filled in the stock market is the one from the Desert Storm War back in January.
But that will get filled then.
That will get filled, sure. I mean, I haven't seen one yet.
It all goes back to 911. Next question. Yeah. If Twitter's like a gap play, that has a big gap, so that will eventually, you might have a 2-3 gap play. It might play out until March. That will eventually close its gap too.
Oh, I think all gaps will be filled. I mean,
Right,
if you
so
go
they all
back
get
and you
filled?
go look at, they might get filled in my lifetime, Victor. That's the problem. And I have, I'm in the 7th furlong of an 8 furlong race, so I don't know if I'll see some of these gaps being filled, but they will be filled.
When did the big boys, they come back from the Hamptons on Monday? Don't they got to pay some bills? So wouldn't it make sense for them to start shorting and take some profit?
I don't believe the big boys really care, because they play with other people's money, and I don't think it really makes any difference to them. It really does. And I happen to have friends that are in the Hamptons this weekend that are big boys, and they really don't care.
What would happen to make this more? I think you could have a nuclear war. I don't think it would go down anymore.
It won't go over. It won't go down until it's ready to go down, whatever that cycle happens to be. I thought that Bradley model had it pretty well pegged for July, but if we go above that, I don't know.
This is a 3-year cycle anyway. It's like a certain cycle date today. It's like a certain amount of days time from the 666 going up to today. It's like 5 years.
It has a lot of harmony there, but it has that anniversary date from 1987. Going back. 27 years ago, and so that's very, very important time. But the astrological part of it is what's important, because we have this
earthquake.
That earthquake, that's a 6. There's 130 earthquakes in the world every year, so there's one every 3 days. A 6-point earthquake. Now we had a 7-point earthquake, 7.1 in Peru yesterday.
I think Yellowstone's going to blow up pretty soon too, isn't it?
Oh, no, when Yellowstone goes, you don't have to worry about anything, because there will not be a CNBC, there won't be a TFNN, there won't be a Larry or a Victor. That'll be it.
All right.
Yeah, excuse me. That earthquake was in Chile. It wasn't in Peru. Thanks for the first second.
Hopefully that gap gets filled, that 911 gap there in 2011.
Well, I don't think there's any question.
What kind of retracement would that be? If it goes back to 109.80, what kind of retracement would that be on your calculator?
Well, you went down from 66 up to 1. It would be about a 61% retracement of the whole move.
If it gets back down to 109.80?
Yeah. That's correct.
0.618, so it's pretty good then. All right, so that gap might get filled then in my lifetime.
Yeah, maybe not in my lifetime, but probably in yours, Victor.
What happens if you take the money supply and split it in half?
Oh, money supply doesn't mean anything. Victor, I used to follow money supply every Friday at 1 o'clock, and believe me, if we had a money supply numbers back in 1983, 84, 85 that we have now, gold would be at $6,000 an ounce and rising. Believe me.
Who's keeping the price of gold down, though? That's what I want to know.
I don't know. I don't know who do. Believe me, I'm the last person they tell.
You're manipulating it. I think you're the man.
I don't think it's. I do not believe any markets are manipulated. I believe the markets are fair.
No.
Honest to God. I'm going to go to my grave on that one, buddy. I really, I don't believe markets are manipulated. They can manipulate them for a short period of time, but for a long period of time, they can't do it.
All right, bye.
All right, buddy. Thank you for calling in. I appreciate it. Sorry we disagree on something, but that's the way the week goes. Okay, we got the Dow still up, but selling off a bit.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a question about what if they devalue the dollar? You don't know how this stuff is going to play out, but I can remember this. Back in 1971, the big shock was when Richard Nixon basically withdrew from the Bretton Woods Agreement, where we were to establish gold as a backing against the U.S. dollar. He took gold as the standard off of the dollar. At that time, the U.S. had 50% of the world's gold reserves, as I recall, and we were not trading gold at that time. It was still pegged at $32 an ounce, but I believe it was in a free market. It was trading at around 65 to 80, somewhere in that ballpark. We didn't start trading gold at the Chicago Mercantile Exchange and at the COMEX until 1972. Late 72 is when it started trading. It came on, I believe, at around 100, 120 and ran up to 240, backed off a little bit, and then took its ride up to 860 before going back to 250 again. But you don't know how those things are going to happen. Now, that's one of the reasons why you want to keep an eye on the foreign currency markets, because if that's going to happen, you can't keep something like that a secret. I mean, because they have to move things around and get ready for it, and make plans for it. And so there has to be something in the currency market that's going to tell you that something is going to be happening. It could be, we have the U.S. dollar at a situation right now, this U.S. dollar index trading at this 8270 area, and we've talked about this before. I want to put this chart up so you can take a look at it, because we're at the 1.618 retracement up here in this dollar index. All I got to do is find it, and then I'll be okay, and that shouldn't take more than a half a day. Let's see if we can. There it is. There, we should be able to find it without too much trouble. We did. Getting a little better at this, not much. But you'll notice that we're up in this area where this circle is. You'll see that it's around the 82.75 level has been the high so far, which is the 61% retracement. And the time from high to high, going back 144 days and 55 days, which are Fibonacci numbers, is exactly equal coming in today here on August the 25th, when we have this big aspect occurring. Whether that's going to be enough to make the euro rally, because the euro has got the most interesting chart of all, because of the fact that let me get it ready for you to show you, because it's really a beautiful picture. Technically, it hasn't done anything yet, but it has certainly done everything that you could ask for. Technically, we completed the big ABCD, and we are right there right now, and we were buying this last night when it gapped down. Hasn't moved very much as of yet, but the ABCD pattern measured down to 131.85, and the 61% retracement came in at 132.20. We're down quite a bit from our high that we made way back in April, when we were making the 3 drive to a top pattern, very similar to what we have going now in the stock market, folks. Those patterns they're flat out the same. They might be different things, but they're flat out the same. And this is the most actively traded thing in the world. It dwarfs what happens in the stock market. Real money is here. It's not in the stock market. Well, there's real money in the stock market too, but there's really big bucks in the forex markets, because the volume that's there is just huge. You just can't even imagine how much goes on there. I mean, to see $50 and $100 million trades go through is not uncommon at all. And you don't see that in the stock market at very, very seldom. You see it occasionally when there's a buyout or something like that, but that's pretty much what we're watching. I think the key today, from my perspective, is the fact that we have to watch this Venus-Uranus aspect that comes in, and also this new moon. We went straight up from a full moon on the 11th to where we are now on the 25th. Straight up. I mean, there was no correction. I mean, we had I think 8 or 10 points in the S&P. We went 100 points, I believe, 200 points. Without even any type of a correction at all. And so the market is incredibly overbought, so you ought to wait a day or two just to see if this correction is going to come, and in fact you can buy it at a cheaper price. I know the Apple is coming out with their second Holy Grail, or whatever it happens to be, and I'm sure people are going to love it just like they do all the other things that Apple has, and it's a great company. But some of this stuff has already been priced in the market, in my opinion. Maybe I'm wrong, but remember, folks, I'm a technician. I don't look at the fundamentals. I don't know how to work an iPad. I've never tweeted anybody. I've never gotten a message on my phone, stuff like that. So I'm a dinosaur when it comes to that kind of stuff, and proud of it, because I just don't want to be on Facebook and LinkedIn and all these other places where everybody can see, everything that you're doing and why. And I don't know. I guess I get a little paranoid as I get older, but we'll have to wait and see. Now, I've also posted the chart of the Dow Jones Transportations in here. We have not made new highs in the transportations as of yet, but we're not very far away. The next one we're going to take a look at is the Dow Jones Utilities, and this one is setting exactly at the 61% retracement today as we speak. If you'll give me a second here, I'll get it lined up. And this makes it perfect if you want to see a head and shoulders pattern, folks. Just take a look at this Dow Jones Utility Index. It's a perfectly symmetrical head and shoulders pattern. In other words, from the left shoulder that we made back in April to the high that we made on July 28th to the right shoulder where we are now, those are perfectly symmetrical in time, and they're symmetrical in price too. We were at the same price back on April 28th as we are now at 558. And the high we made was 577, so you have a perfectly symmetrical head and shoulders pattern. It cannot get any more symmetrical than this. And we've been straight up since the 11th, so we're due for a correction in the utilities also. So this is why it's hard for me to be too overly bullish on the stock market. In fact, I'm overly bullish is probably the biggest misnomer I've ever said, but I just think this is a giant trap, and we'll see. I will say this: if the New York Stock Exchange Index closes into new high ground, I will have to say we are going to go at least 5 to 10% higher before they finally get to us. But when they do get to it, it's going to be extremely, extremely nasty. And the reasoning behind it is the Federal Reserve. What they've done is not kosher, and that's going to be the thing that makes the fat lady sing, and I think that'll be go into the history books like it did in 1835 and 1865 to tell us that there's some major things happening that shouldn't have been happening. Putting that much money into it, I didn't get any of it. I know none of my friends did either. I know all the people at J.P. Morgan and Goldman Sachs and Bank of America got their cash, but someday these too big to banks fail just might not have a backer to take care of them. I guess I'm a little paranoid as I get older, but when I look at what's happened, it's not normal, folks. This is a giant experiment. I know there's only a handful of people out there that are making any type of cautioning about it. There's a guy from the Stanford Business School, and there's a guy down in Texas, and of course, my little old self that doesn't know anything but charts. And to me, looks like interest rates are still going to go higher, and we have to cover bonds here because we had a major Gartley pattern form here last week that we talked about on the show, and so far the market has backed off a little bit. I mean, it's backed off a half a point, which isn't much, but at least it's going in the right direction once we hit that 61% retracement. This is a major Gartley sell signal in Treasury bonds, folks, because we have we're at a 61% retracement from the highs we made last May. We have several ABCDs that fit into that zone also. So all of that tells us that this is a major sell signal that we're seeing in the Treasury bonds. We're seeing the same thing in the Treasury notes, which is the larger of the two markets, and we should take a look at that one too, because that's the one that controls all of our interest rates and car loans and credit cards and all the stuff like that. So that'll be the next one that we'll take a look at. And you'll see that this one also has a very, very bearish pattern that has done the same thing, only it is far, far weaker than where we were. If you'll take a look at this, you'll see it's barely at a 382 retracement from where we were way back in April. So this tells you that the money is they're searching for higher yield, and the Treasury note looks like it wants to go a lot higher. So that's what it appears to me from looking at Treasury notes. So it's much more bearish than the Treasury bonds, and we still have Spanish bonds are still yielding better. In other words, they're giving a better value on Spanish bonds than they are in U.S. bonds. The yield on the 30-year bond is lower than it is. Let's get that right. It's lower than it is on the Spanish bonds, which that's why Spanish bonds are, rallying. And believe me, they're not anywhere near AAA rated. So, but that's what people do during times like this. We also have the junk bond market that we've talked about. We had the big break in junk bonds, and then we've had the real strong rally back. almost exactly to the 786 retracement. And this is why we're setting at a really critical level here today in junk bonds, because we are within just a couple of pennies of the exact 786 retracement in the junk bond market, which it's a very large market because this is the secondary market for these companies on the Russell Index that, they don't get AAA ratings, and so they're not really junk. They're what they're called high yield bonds. That's what Mike Mildum renamed them. They were called junk for many years because they were rated B and C, but Milcom had them changed to high yield bonds, and then after he was gone, they went back to junk bonds again. So we'll wait and see. Okay, since we're talking about the Russell here, I'm going very quickly, but I wanted to cover some of these things. The Russell has been the weaker of all of these indexes. We're up today in the Russell, a small amount, not a whole lot, but we're still right near the 60. We're right above the 50% retracement that we made last week, and then of course we gapped up today. Just another point or so, we'll be right at the 61% retracement on the Russell. So even that one is lagging the market quite a bit. So we need to focus on that also. So even though the stock market is going up, they talked about 2,000 in the S&P, just like they did 17,000 in the Dow. That's just a round number, folks. I mean, I've looked at these numbers for years. They're all just round numbers. We went from 17,000 down to 16,300. So we could go from 2,000 in the S&P down to, say 1975 or 1980, and it would still be a really bull market. It would be, taking profits. That's all it is. And, history says that the profit-taking does come in. The main thing to follow, in my opinion, is the fact that we've had this full moon back on the 11th, and then the new moon now with this Venus-Uranus aspect, which is a very strong aspect. What we did I think you probably this might be interesting, but when we saw this in Bradley's book, when Dr. Miller showed it to me, it was the only there were 4 diagrams. They were all related to Venus-Uranus, either conjunction, opposition, square, or trine. And a trine is what we have today. And then what we did was we marked on the calendars what days those were in history. We went back 135 years, and then we matched it with the price action, and we saw that plus or minus 1 or 2 days, these were calling turns just like nothing we'd ever seen before. And this is part of what the Bradley model does, but the Venus-Uranus aspect is the strongest of those for stock market purposes for some reason. Why, I'm not sure. It could be I think it would be the planet Venus, because it has that 618 retracement or expansion of the cycle. Because if you take the Venus cycle, which is 225, and you divide it by 365 days, you come up with 0.618 of a year. And the other planets do the same type of thing. They have those same types of relationship, but this one happens to be, 618, which is one of our favorites. So that's why we watch it, so very, very closely, especially when it comes in on a new moon like it's doing today. So we'll see if that's going to be the case. It was interesting, though, that the S&P futures did not make 2,000. I was really surprised. They hit 1990. They missed it by one tick. 1999.75 was the high on the futures so far. Of course, it's still early in the day. It could go back up there without any trouble at all. But so far, it hasn't gone above the 2,000 level like the cash has. And cash is real money. That's where the real money happens to be. Now, the NASDAQ has gone, that's the one that's on steroids that we always talk about, and it has gone a great deal higher than I anticipated. And hold on a second. We'll show you this right after the break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I posted in the NASDAQ chart, showing the number of days up. We were 11 days up on Friday. That was Thursday, and then Saturday, let's try Friday. Now we're 13 days up. And we're, basically looking at that same aspect that we've talked about, that Venus, Uranus, and the new moon. So we should be backing off just a little bit. That's a big ABCD. The next charts, I posted 2 charts in here, which is the IBB, the biotech index. And as you can see, it made a butterfly pattern, backed off for 2 very quiet days, and then today gapped up. Now, if this is really a big move here and we're really going to continue on, the ABCD of this move, going back over the last 5 months, would take it up to 292, and we're at 271 right now. Well, that's only 20 points away, folks. And if this market can go from 210 to 270 in a matter of a month, we can certainly make $20 without any trouble at all in this. So this is why you've got to be extremely careful here, because if it does break out, it's going to go a great deal higher. This is a failed butterfly pattern that is here. You would have been getting out of it right after the open this morning, because once it went above that D point, it told you that it pretty much wanted to go to a higher level. This is a really critical day today for me from a technical standpoint because of the new moon and the Venus-Uranus aspect. So it's going to, and then the levels where we are, because we made a new high in the Dow Jones futures. We have not done it in the cash yet. We've made a new high in the cash S&P. We hit 2,000. In fact, we went to 2001, I believe. We have not done it yet in the futures, but it's still kind of early yet. And we made the expansion in the NASDAQ. The New York Stock Exchange Index is still hovering near the 786 retracement, which is the true overall market. But we'll have to wait and see. The interesting one that we haven't talked about yet is the VIX index, because the VIX index is held relatively well here. It hasn't collapsed like one would expect. I think part of it is what Basil talked about, the spikes that we've had over the past 3 or 4 months when the market has had a tiny bit of a correction, has scared a few people, so they are taking protection, against something like that happening, and they could be using the VIX index as a way to protect themselves, for a market jolt of some kind. In the German market, the DAX, I follow that daily because of it trades so beautifully. We're making a big ABCD pattern from the high we made at 10,000 in the DAX. Then we went down to 8,900. We're making our first ABCD correction. It's taken just about 3.5 weeks to finish that up in here. So that's going to be an interesting chart to be watching also here over the next few days. But the main thing I think is to keep an eye on this the date that we have today with this new moon and the stock market today. And if we do break into new high ground in the Dow Jones futures again, and also in the Dow Jones cash, and if we go into new high ground with the New York Stock Exchange Index, you just can't be bearish, because you don't know where it's going to go. I certainly don't, and neither does anybody else. But if it breaks into new high ground like that, you just got to wait and see. Believe me, if this market ever does start down, and it will, it's going to give you plenty of opportunities to sell it. That much I can promise, because there's enough people out there that are bullish now that it'll take them 2 years before they turn around. Well, that much I feel pretty strongly about, because I went through one of those during 1973 and 1974. But those were different times, because we didn't have a Fed that was, doing things that they're doing. But we'll have to wait and see if that's the case. So that's it for today. Live every day in an attitude of gratitude, and may God bless.